Welcome to Private Banking Strategies Podcast with Vance, Lowe, and Seth Hicks, your secret weapon to protect your assets and never have to start over financially again. Vance and Seth help high net worth individuals, families, business owners, and investors structure an asset-protected, tax-free fortress for their families. Learn how to keep what you earn and use the velocity of money to create your own private banking system. Join us on this journey as we explore the secret strategies of the rich and political elite and help you take total control of your financial security. Now, on to the show.
Hello, welcome to the Private Banking Strategies Podcast with Vance, Lowe, and Seth Hicks. This is a secret weapon to protect your assets and never have to start over again financially. Hey, Vance, how you doing?
Hello. It's nice to see you again, Seth, and it's great to get back in the saddle and get another podcast for our listeners.
Likewise, yeah, absolutely. So today we're going to talk about private banking strategies as an investment strategy.
Well, yeah, one of the things that really caught my eye in seeing that you don't have to be limited was the ability to get the money back, like banks. You know, we live around banks, do everything with banks. We try to take every advantage. We always complain that the banks aren't treating us right, which is correct, by the way. But the banks are doing something right that we or the public doesn't do. We are switching people from spending money to using money. Let me give you a good example here. If I was a money manager for you and you gave me $100,000 to manage, the first year I double it. In year 2, I lose 50%. In year 3, I gain 25%. In year 4, I lose 12.5%. At the end of 4 years, now this is probably unfair to everybody, how much is in your account? If you're a good math wizard, you're going to be very close to $100,000. But
Right.
Guess what I legally get to put in the prospectus for that 4 years? That fund averaged a 25% annual rate of return because mathematically that's the number that comes up. And people will invest in that all day long, but they ask the wrong question. The correct question to ask, folks, and this will really throw your brokers in a tizzy, ask, what is the yield on this account? Yield means money put in the account that cannot be returned. They can't reverse it, cannot be reversed. Banks were very big at the beginning on yield, especially savings accounts. Everything's in your account and nothing can be taken out of your account. Life insurance is that way. It's all based on yield. Okay. Right. Everything that all the profits, they could have a big profit one year and a loss the next year. Nothing comes out of your account. Everything's there. All the guarantees are there. So yield is important because if you would have asked me, what's the yield on that 4 years? I would have had to say 0. Now, how likely are you going to be to buy that investment? Yeah. You can do that with stocks, bonds, mutual funds. They're going to tell you can't. Well, we don't have any of that information. Well, then why would I want to make a decision on false information, on a mathematical number that doesn't equate to what I'm actually going to get?
Right.
That's one of the biggest faults and problems with financial planning.
Right.
So what's the counter to that, Seth?
Well, viewing the big picture and looking at your whole personal economy and focusing on yield, obviously, with your investments and where you've got your money at work. Also, there's elements of keeping control, having, the decision-making power, at being smart with your own decisions. But that's kind of a tangent. But I think, it's basically looking at a big picture rather than
small picture, right? So here, the first thing I saw on this topic was I now own the debt. I woke up my money and I actually bought my debt. I bought my mortgages. I bought my automobiles. I bought everything I possibly could, my other companies, and now I'm receiving all that third party profit is coming into me. But guess what, Seth? And folks, it's totally tax-free. All the money I got back for my automobiles, that $500,000, totally income tax free. Talk about a macro picture. This is wide open. You open this up to your extended family. Hey, we got a family bank. We're going to self-finance. We're going to charge a good interest rate. Interest rate's going to be turned around, and it's just going to multiply like crazy. So there's a good difference between micro and macro. Net worth is a measurement for financial planning. Net worth is what people go on. And you know what? That doesn't feed people.
Right.
If you have a net worth of that and you don't have control of that, that's meaningless. It's great for the IRS because they can tax you on it. So what's the alternative?
Rather than managing or measuring rather in the total portfolio value and creating bigger portfolios, it's more about cash flow is the measurement, especially when you're buying debt and you've got cash flow streaming back into your banking system. Like you had mentioned, the more debt that you purchased on automobiles and real estate, the more cash flow you've got coming into your banking system. That's really the measurement.
I agree with that right off the bat. When I started this, I received the training from the very best people out there. R. Nelson Nash himself really tutored me on this concept. So I immediately sold my company and received quite a bit of money. And Nelson Nash, in his books and everything else, set up a process of funding your bank, funding your company, your lending company first, so it's profitable, and then start the money process coming out. Well, I figured right off the bat, if we used what's called a paid up additions rider, we could go back or do a big portion in single premium, which was cash valuable immediately, and I could start banking almost on day one. But I had all this cash back in my control. I was worried where I was going to put it. So I decided right now my monthly overhead for all my stuff back then, 20 years ago, was $10,000 a month. I could buy that debt, but did I want to wait 5 years to get that into my life insurance policy? So the math at $10,000 a month is $120,000 a year times 5. That's $600,000. Right. I don't think I could make that up had I waited. So I macro planned together. I bought the debt and I reversed the cash flow of $10,000 to inflow. That's literally a $20,000 difference from depletion to addition every month, folks. That's what we're talking about here.
Yeah, and Nelson describes that in his book with regards to drag versus lift, right? Or maybe he didn't describe it in his book, but he certainly taught the principle of an airplane heading into a headwind, which creates a drag or a shear down. And that's what that $10,000 going out and you losing control of it and you losing the ability to put it to work versus buying the debt, having that $10,000 coming in and creating lift and a tailwind that accelerates your wealth curve.
That's beautifully said, guys. Well, let's go on. From that, on the financial planning side, we were always 100% oriented to retirement. And for the life of me, over 30 years of this type of planning, I had to be able to answer the question, which is the fear question: when I retire, am I going to outlive my money? I don't care how much they had, that was the number one fear. When I retire, am I going to outlive my money? Because they admitted they're going out of production. They're not going to be creating any more cash flow. And you can't do that. You can't run an economy that way. So it was always a reward not to work. So the opposite of that, Seth, is, what is this abundant freedom oriented?
Well, it's enjoy your life now and create a life that you want to live now and have predictable money for retirement, but you can still utilize and create that velocity that we're talking about and that return on the cash that you're putting to work in your private banking economy. And it's not stored up for some rainy day. You're able to actualize and realize it now.
So let me give a little picture on that. Picture a small town. There's a bank in town. You own the town, in essence. You own the bank in town. You own that town, but there's a lot of other stores and things and commerce going on. And this is what we're talking about in abundance. Everything is going on. Pretty soon, town has maneuvered itself so that it is attracting far more money coming into town than is leaving town. And when a town does that, it really prospers. And people can live on that. They can live the way they want to, do the things they want to do, but they're still operating their town. And that's what we're talking about here, folks. Switching from working from someone or even working from yourself, which is still for the government and the banks, to operating your own private system that creates no taxable events.
And that's a huge one right there, is that this growing and compounding without any taxable event as you use your money, as you pull it out, as you buy the debt, and then as you ultimately take it out in retirement or as it's given to the next generation, there's no tax consequence there.
Absolutely. Absolutely. Another product of financial planning is everything lives and dies on interest. It's all about interest. And that's wrong. This is what got me so angry. I was very good at this. We were really good at this compared to the national money management firms all over America. We were really priding ourselves here. But this was the focus. It was all about interest rate returns. And this is not how wealth is built. Interest rate doesn't pass on. And so the alternative, and I want to say this a different way, Seth, and I want you maybe to explain it. It's from living only on interest to using and replacing principal.
Well, what comes to mind right now is how interest rates have moved up and it created like a housing freeze in a sense. I mean, people can't move out of the house that they have and buy an equivalent comparable home because of the interest rates. If they're locked in a mortgage rate that they had pinned at 3 or 4% over the past 5 years at all-time lows, and now they have to, and that's ticking up a point or 2 points, their mortgage payments for the same type of house will almost double. And so I think that we're going to see continued housing cooling, market cooling. And so when you're locked into that type of mentality where it's interest rate driven, you're very limited in what you can do. And the same thing would be for anything that you're going to finance, unless you're using your own financing entity. And then we're not interest rate driven. You're actually the banker and you want an interest rate that fits within your means, but as high as possible. So, especially when it's tax free and coming back into your control. So you want to be able to live within your cash flow, within the money that you make. But within that, it's not an interest rate driven mentality.
Yeah, I agree with that 100%.
Did that story feel like it was about you? Do you feel like you are generating a lot of revenue, but are not moving forward as fast as you would like? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
Another philosophy of financial planning compared to what we do is money stays still. Literally, I learned that you put the money asleep. When you have to leave money in an account to earn an interest rate return, that money is asleep for you. It is not working for you. It's working for the individual who has the money. Versus what? What's the opposite of that, Seth?
Money moving and creating velocity, right?
Yeah, so this is why lending companies lend money, is to get this velocity and volume. Okay, the velocity means every time a dollar has absolutely no value until it moves, until it trades hands. Okay, and it's a touchdown. It goes up in the air and it touches down. And so the velocity means how many times can I get it to touch down in a year?
Right.
Because every time it touches down, it's going to create another dollar's worth of product and services. That's how money works. Okay. The volume then comes into, can I make that circle and keep adding more and more and more money and lending more and more money out there to increase my cash flow return into me? That's the secret. That is the difference. An
Right.
age-old strategy that has never been updated versus the way America, and I believe in a hire maker, that, our country was really blessed with a strategy to make it so powerful and so strong faster than any emerging company in history based on this strategy. Dollars do only one job.
In
What
financial
does
planning.
that mean for financial planning? What does that
Yeah.
mean?
Well, I think that it's more of a scarcity, poverty type mentality as saving for education and emergencies and retirement and the someday type mentality and always saving. And we talk about that in podcasts about the fallacy of saving cash and buying everything cash and how that is a flawed paradigm, a flawed model. Spending the dollar for one particular purpose and then that purpose is met and your dollar's gone and you can't use it again. Whereas opposed to the private banking strategies paradigm, we've got much more robust application and use of the money. We're able to, like you said, use it for more than one thing, have multiple touchdowns for the same dollar in a year, and being able to use it for multiple and flexible purposes as opposed to one purpose only.
In America, we don't even know we're slaves to the system, brainwashed in what we should do. And I called it get back to zero strategy. One of the cars when I first moved to Texas after I got married, and I was saved up for a car. I could buy a brand new Chevrolet I bought for $25,000. I went into the bank and said, give me a check. I'm going to go buy a car. So it took me a couple of years to save that up. I took the money and went and bought the car. Where does that leave me, Seth?
Back at zero.
Zero. But I got a new car, but
Right.
The car's going to wear out, isn't it?
Right.
So when people say to me, when they do this very same thing, well, I don't have car payments, I laugh and say, liar. You have to replace that car eventually. So you're either going to have to take more money out or whatever else. So the alternative is go in debt and then make payments. And then when you've got the car paid off, where does that leave you?
Back at
Zero. And a worn out car.
Right.
Okay. There's a better system, folks, rather than spending money, having to go back to work. I've done some calculations for a lot of people and cell phone businesses. It could be as much as 25 to 1 to replace a dollar that you spend if you have to go back out into the workplace using your car, your wear and tear, your time, making everybody else profit, paying Uncle Sam just to get the dollar back so you can spend it again.
Right. And you're implementing your own private banking strategies where you are empowered as the banker. You make the decisions with investments that you're comfortable with, that you know about. For some people, that's real estate. For some people, that's widgets. For some people, that's, logistics. Another person, it may be automobiles. And they apply their trade expertise and empower themselves to manage their own financial kingdom, so to speak. And money can be simplified. It's not something that is overly complicated that people should relinquish their control to someone or supposed guru, like you said, and then look back and go, wow, I should have never done that. They should take control of their own finances and implement strategies, like I said, that they're confident with. So money can be demystified with private banking strategies, and that helps build financial confidence. Our clients have financial freedom, financial confidence, and control over their wealth. And if folks want to learn more, you can find us at www.privatebankingstrategies.com. It's privatebankingstrategies.com. And on our website there, you'll be offered a free book that Vance and I wrote entitled What the Banks Don't Want You to Know. And that book highlights some of these issues and many more that act as a red pill to folks who are new to these ideas and these concepts. And also, we've got all of our podcasts there on the website that you can listen to for free. There's content on every type of subject matter that you could want to understand with private banking strategies. We've got other resources and materials and articles. And if you've done that, if you've read some of the emails that we send and these things are resonating with you, you've listened to some podcasts, you can schedule an exploratory call with Vance and ultimately create an 8-year plan to see how private banking strategies will work, particularly for you and your family.
Did that story feel like it was about you? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
Thank you for listening to the Private Banking Strategies Podcast. Click the subscribe button below to be notified when new episodes become available.